Good evening and welcome, everybody. Excuse me. This is the Thursday evening webinar. Tonight's topic is detailed mid-band trades. So obviously we're going to cover what those are in great detail tonight. But first, before we get to charts, we have to knock out our standard disclaimer. So let's knock that out right now. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, excuse me, everybody in here does know that you do trade at your own sole discretion. By the way, just a heads up, if you're coming in late or you have to leave early, don't sweat it. This is being recorded, and tomorrow morning it will go up on the, of course, into the membership area where all the webinar recordings are for you members, and we will put a copy of it onto the public website. And let me just show you where that is real quick on the toolbar here, in case you haven't seen it. There's this little bug in the corner here that's actually sort of a compressed navigation bar, and the second one down is called webinars. And so we pulled about, I don't know, there's probably about 24 on here, roughly, of most recent webinar recordings. So, you know, if you've got a spare couple hours, I suggest that you go ahead and watch some of these. They're really good. They help you with understanding the terminology involved in our setups and how we trade. You know, how different trade types. And the one you're at here tonight will be posted here tomorrow. So, like I said, if you're coming in late, I see people still coming in. Welcome, welcome. We're just getting started. You haven't missed anything. Excuse me. And if you do have to leave early, we'll make sure you get the recording. Okay. All right. So let's get over to some charts here. I'm going to go over to screen 1 and explain what you're looking at here. Some of you might be visiting. I know we had an open house thing this week, so you might be, some of you, completely new and not really familiar with what all this is you're looking at. So I'll just take a quick minute to explain it. Excuse me. Got this tickle in my throat right before I open the thing. It's driving me nuts. Got some tea here. Excuse me. Okay. All right. So we trade futures markets intraday. And what that means is that we're active traders for the first couple hours of each morning. I'm here in California. So the time you see on this chart here is Pacific time. Pacific time. So let's go over to the beginning of today. Today is Thursday, August 8th. And so midnight Pacific would have been right about here. Excuse me. Sorry about that. And so overnight what you have is, of course, you know that the afternoon evening session is the Asian session. Asian banks and active market participants and traders all over the world are trading out of you know, Hong Kong. This is their morning over there, right? And then in the from midnight on here is the European session, because that's their morning. And so the active traders and banks trading futures all over the world and in Europe are trading, you know, the E-mini, S&P, the Russell, etc. And so if you're not familiar with the various instruments, you can go to cmegroup.com or just simply get some instruments into your, we're exclusively on the Ninja Trader platform, so these are Ninja charts. Excuse me. And we're going to look at the crude oil tonight. This is crude oil futures, CL. We can look at the ES contract. Some of you, in fact, let's do this. Let's take a quick poll show of hands. How many of you trade futures now? And if so, what instruments? Could you just type in your instruments? And I'll see if we can get to all of them, because I have to limit the time I spend on each one if we're going to cover a lot of instruments. Excuse me. ES crude oil from Robert. ES crude oil, a lot of ES crude oils. Wow. There's a NASDAQ from Ken. RTY Russell from Michael P. Gold futures from J. Another NASDAQ from Jim and Q. So those are the equities, what most people are naming for those of you that are new. Two futures. ES is the E-mini S&P futures, 1250 a tick. All of the equity contracts are on the September contract. So futures bear some resemblance to options contracts, which have expiration dates. But of course, the instrument itself is very different than an option. But they do have dates where they roll forward. Gold futures, of course, we're going to look at. We also trade that in the live room. That's on the December contract. It is $10 per tick of movement. Now, these M's that you see here, just real quick, these M's are what you call micro minis, micro E-minis. This is relatively new instruments from the CME group. They were created they're 1/10 of the normal E-mini contract. So, for instance, let's look at the Russell M2K micro. The Russell itself, RTY, which is the chart we're looking at right now. This is the Russell RTY futures. It is $5 per tick of movement. September contract, just like all the equities, right? And M2K is the micro, so that's 50 cents. Now, the reason that they did that is to allow new market participants, new traders who want to come in and start learning to trade futures to reduce their risk and exposure to stop outs. So if you get, say, a 12 ticks hit on Russell, that would be $60, 5 times 12, yes? If you get stopped out on a micro, it's 1/10 of that, so it's only $6. Now, some of you might be saying, well, can I make any money on micros? Frankly, that's not really the point. The point is that you can trade with very low risk and not feel the pressure that you normally get with full E-mini contracts. So that's what that is. We also in the room have the mini Dow, also $5 a tick. This is the YM futures. We'll look at this tonight. And what you see here is we're connected to the data feed to our broker. And this is 4 range bars. We like 4 range bars. We've traded them for 10 years. We got away from time-based bars a long time ago. And we like the consistency that we get with the 4 range. And so we have our indicators, which are the C-sharp scripts. We have them in both Ninja 7 and 8. And they are the background colors that you see here, the red, the green, and the transitional. We have bar colors, blue, yellow, and red. We have power meters. This is the 4 various trends on the chart. Green is obviously going up. We have predictors, the real-time support and resistance levels. Gary leaves those on the room, but you can turn them off with that button right there. Of course, we have the alerts. This is a relatively new indicator as well. I think it came out a couple months ago. In trends, I'll show this in a little bit. I want to get on to trade setups, so I'm just sort of giving you an overview. But when you're in a trend, say up, you can turn on long mid-bands, which will flash the bars when they occur. Extremely helpful indicator, and everybody we trade with just loves this indicator. Minimum criteria and phantoms in an uptrend. Let's talk about trending for a second here. Checking sound check. Mahalo says lost sound. Sound check, 1, 2, 3. Everybody still hearing me okay? Chart moving, cursor moving, audio coming through. A couple people said that they lost. Oh, it's back. Oh, you're good. We're good. Okay, so let's talk about visually what you're looking at here and how to. One of the most important things, of course, is and I forgot to mention. Let me just blow this up real quick here. One of the most prominent things on here are the bands. So we have 8 total bands, and then we have the thick mid-band in the middle. 4 bands below it, 4 bands above it. And we have line 2, which is the thin red line here, and line 6, which is the green line right here. Now, I want to make note of something here that is very helpful from a visual perspective in terms of determining whether you are in a trend or not. And I want to speak specifically to, let's look at this morning, okay, my time, Pacific time, from here to about here. Now this would have been about 5:10 a.m. Pacific. I'll put a line right there. Can everybody see the difference between how this part of the chart looks to the left and how this part of the chart looks to the right? So what's the differences? What are the differences that you see over here, this part of the chart versus this part of the chart? Anybody? Everybody can see they're different, right? I mean, they're very different in how they look. But what's going on here to the left and what's going on to the right? Can anybody tell the team? Just cast your vote on what's going on here. Yeah, on the left, it's pretty obvious that this market Russell was very choppy. Characteristics of a choppy sideways market are the striped background. So there's not one consistent color. You'll find also that there are periods of time when the mid-band will be flat, like that. Flat. Several places will be flat. You'll get a lot of places where you'll get the transitional background, which is this sort of intermediate color here. So it's not green, it's not red. You're not really trending. That's right, Frank. This is not really a trending market to the left. And so the reason it's important to know whether you're in a trend or not is this has all the decision to do with what types of trades you take. Here's why we say this. And this is a fundamental thing that's important to all of our trading that we do, as well as the mid-band. By the way, I have to just say, for those of you that are new and learning, and those of you that have joined us in our learning, the mid-band would probably want to be the first trade type that you want to learn. We have minimum criteria, we have the deep probe phantom trades, but if you want to just start with something really basic and simple, stick with the mid-band to start, okay? And let me explain what that is. When you're in a range, as it is in this to the left area right here, you're going to notice that the swing levels are usually going to be grouped, not too far away from the mid-band. So what I'm explaining to you now is the logic of sort of the birth and how the mid-band trade works. You would generally want to avoid choppy areas like this for mid-band trades because once you draw a region box around the mid-band to get in using our object trader tool, and you're filled with a little bit of slippage plus commission, and the time you have to get out of it by fading a swing, there's just obviously no meat on the bone to make any money here. Likewise on the short side. So let me be clear what I'm explaining here. Generally speaking, when you are in tight range-bound conditions, and then when I say tight, let me explain what that is. Here you're looking at support around, say, 03, and resistance at 05.60, 20 to 25 ticks. This is not really a tradable range. There's just no meat on the bone between here and here to make any money. So generally speaking, mid-band trades are not good ideas in ranges. The only exception to that is if you see a very large range, okay? Let's say that you find an instrument on any particular day and the range is maybe 40 or 50 ticks, like this. And the top and the bottom of the range are really well defined. You can really, it's hitting it, it's respecting, coming back down, getting in. And so to get enough meat on the bone, there's got to be at least 20 ticks here to make any money, right? And on the short side for support out of a mid-band in a range, you got to have at least 15, 20 ticks on the downside to make money on the shorts. Everybody understand that? That's a very important concept to get right as you start learning the system, okay? So the first thing we do when we start to identify what types of trades we're going to take is we ask ourselves, we do a quick assessment, and we say, is it trending or not? Okay, it's the first thing. Is it trending or not? And that's sort of question part one. And part two, or 1A and B, if you will, is the market trending? And if the answer is yes, then the question is it trending up or down? Right? So let me just recap that on the chart here, so that Everybody's got that sort of down. Okay, so let's put it this way. We'll put different terms here, different people call it thing. A market that is range bound which in a sense, a range bound market, everybody knows, means that there is no trend present. Generally speaking, and like I said, there are exceptions to this, but as a general rule, mid-band trades are not recommended. Not with capitals, NOT caps, recommended. Okay? So this condition on the left would be a situation where you want to pretty much avoid mid-band trades. And I'm not, how to trade the range is really not the topic of this webinar, so I'm going to kind of skip that. But everybody sees the difference between the left and the right. Now, here, it's very clear that we are in an uptrend. An uptrend is characteristic of higher highs, higher lows, solid green background, mid-band, and all the bands are stair-stepping up, as you see right here. Bars are predominantly blue, and this is said to be an uptrend after about 5:10 a.m. Pacific my time. So uptrend, mid-band, okay. Trades, mid-band trades, okay, right? And we are looking for pretty much, unless there's a news event or, you know, the Fed announcement or, you know, a crude oil inventory on a Wednesday, pretty much you're going to want to be sticking with long trades only. If you want to keep it really simple, right? When the market's trending up, it's okay to take mid-band trades. It's actually heavily recommended to do so in an uptrend on pullbacks, looking to the long side only. Okay? Everybody clear on that? Now, let's get into the actual definition of a mid-band trade itself. And we'll look at the long side first. Then we'll switch to a different instrument and look at the short side. So let's talk about what the concept of mid-band trade is. What is it, and why does it work? Why is there a high probability of success from mid-band trades? Here's the concept. When you're trending, and you notice if you watch charts, if you're a student of the markets and you watch charts a lot, you're going to see price patterns that repeat themselves. Okay? And in the case of an uptrend, I'm going to just show you some. Let's get this out of the way here for a second. Okay, we all know it's up, so just get rid of that. That there's sort of an ebb and flow to a market when it's trending, right? In the case of the uptrend, what we call the push in the trend direction is obviously going to be up. So let's look at some micro sort of versions of that. Here's the push in the up direction. Here's the retracement. Here's the push. Here's the retracement. And these are all, and most of you know, of course, that the vast majority of trading that's done in these markets is all computer driven. It's algos. It's scripts running on banks and people's computers all over the world. And so what you're seeing here is that there is a consensus among the algos, if you will, that the market should head up and the buy programs are turned on, and that's why you see these ebbs and flows. So you have push, retracement, push, retracement. Over and over, it repeats itself. Why are they doing that? Why are they doing that? Why do markets do this all day and all night long? What's going on here when you get a trend? Push, retracement, thrust, pullback. What's going on here? Why is this? Why does this cycle exist in all these markets, even stock markets, Forex markets? This is kind of a universal price action reality. I mean, really. I mean, this is what it does every day. You watch charts, and I've watched tens of thousands of hours of charts. I'm here to tell you, this cycle repeats itself over and over and over again. Well, the algos are tuned, depending on the instrument, to drive a market in a given direction, in this case up, and then there is some amount of profit taking, right? Thrust, retracement, profit taking. Now we're talking in some cases of traders who take thousands of trades. So they're scalping out. It's a different style than what we do. So when a market gets up to a fresh swing, and generally the distance between the mid band and the outermost bands is somewhere right around 20 ticks. So let's look at this trade right here. Here, the apex of this particular thrust was at 1250. Can everybody see the swing right here? See it? 1250. And then notice how you have a series of bars that come right back to the midband, which is sitting right at 10, roughly. So what's the distance between here and here? 1250 down to 10. It's about 15 ticks. Right? 15 ticks. It's going to be usually in the 12, 15 to 18, 20 tick area, depending on the size of the thrust. You can see, for instance, here, the apex of this push was 1350, and it retraced all the way here down to 10. So in that case, that's 25 ticks. Everybody see what I'm talking about here? So let me really blow this up, because here's where I'm going to really get into some detail about how this works. Okay? There are three trade types that we teach, and I'm going to show what the other two are and then zero right in on the midband. A minimum criteria trade in an uptrend would be where the bars come below the stealth line and below line 6. So here's an example of a minimum criteria trade. Here's another one right here. So what that means is there is sufficient retracement from the top of the apex of the thrust that you have pulled back enough and you find consolidation here in the uptrend just below line 6. And so there is enough retracement to take a trade and see it. In this case here, let me do an example just real quick. Okay, so you put a region box or you bought the support level in here, you're filled long, right? And every time when you take these, your initial goal is to at least get back to where the swing was from the retracement. Okay, let me show another one. These are minimum criteria trades, so I'm just going to show a couple of them because that's not really the topic here. Here you got it, right? Here you got it. Now, so when the algos in the uptrend are taking their micro profits, you get this pattern right here. When you get a deeper amount of profit taking from the algos, as happened right here, the bars will come all the way down and in some cases actually sit directly on the midband itself. This thick middle line. Some of you are just coming in. Don't worry, you're a little bit late. It's okay. We're about halfway in here, but it's all right. It's recorded. Everybody get it. You're going to get it. Excuse me, everybody's getting a copy. So by definition then, a midband trade is defined as when the bars enter into this zone right here. And let me explain it like this. In my personal humble opinion, in trades that I really like every morning are and they're very, very high success rate trades. And if they do not work out, normally the stop is very tight. You get out very quickly. Okay, that's why I like them. Is that there is a likelihood when the bars come to this midband and sit on it like this and bounce, that there will be follow through. If you had drawn the region boxes I have shown here, you would be filled a market order long on the close of that bar outside the region box using Object Trader tool. And you come back and not only hit the swing here, but you break it and go on to a fresh swing high. This is a good example of a perfect textbook midband trade. Sometimes you'll hear that in the live room. And how it works is this. Here's how you can sort of, I'll share with you sort of a quick exercise that you can do that's quick, easy, inexpensive, and you just need your chart. Here's what I do. It's muscle memory, brain power, trading muscle memory, right? Okay, so you see these swings. I'm recreating the Russell at the open. So here's 6:30, markets open in the U.S. 6:30 U.S. equity market open right here, right? And so we're doing a little exercise. We quickly do market assessment. We see the trend is up. You don't have to write anything down. You just have to sort of know this, that the uptrend, yes. Long trades only. Mid-band trades, good. All right. So we're looking and we're looking and we're looking and we're saying, okay, you go up to a fresh swing. So my eyes, as I do this exercise, let me explain. My eyes are focused right here. Okay, I'm going to do it a couple times with you, and you can do this yourself. Fire up your chart, load up your indicators, and do it just like I do it right here. Okay, so I'm focused right here. See where my cursor is? Okay, see that little swing up there? Now, I know that's the minimum criteria, and as I said, for the purpose, we're not going to really talk about that. You can learn that later. You can eventually learn all these trades, put them in your sort of trading repertoire, your toolbox, if you will. And so here we see the push. Now, just a word of caution, as this market is pushing higher, you have to fight, and this is hard, the tendency to have the FOMO, fear of missing out, and you want to pull the trigger market order to get in up here. So one of the tantamount things to your success is and I'll put it right on here under this thing here, just so it's really crystal clear. Retracement trades only. So remember when we said how a trend works? Remember the concept? You have thrust and you have retracement. Thrust and retracement, thrust, retracement, et cetera, et cetera, et cetera. And so what we're saying is that in an uptrend, each one of these thrusts are not the place to get in. Okay? The thrust is not while the market is thrusting, and I'll explain that in a second, while the market is thrusting, that's not where you buy it. Now, I know a lot of you could, pull the trigger, you fear it's in around 100 ticks, it's never going to pull back, you're not even going to get in, you're going to miss the whole thing, and that's the trade of the day. Well, you know what? It just doesn't work that way. Almost always there's a pullback. The question is going to be, how deep does it go? Now, follow along with me. Here we can see the mid-band is stair-stepping up and sitting right in this area right here. So with our eyes are focused to see and take this trade. In fact, let me get these little arrows out of the way so you can really see real good what's going on here, okay? All right, here we go. Here was the thrust. Here begins the retracement. Now, I want to ask a pop question. I hear some snoring. You guys are probably dozing off. I hear a couple thumps where your head's hitting the table. If you don't have any coffee handy, let me ask you a question. How do you know that this move is a retracement and not part of this thrust? What's going on with the bars here? Anybody? What's going on with these bars? And how is that different than these bars over here? These bars are different than these bars. What's the difference? Here, let's look at a couple. Let me circle a couple of them so you're clear what I'm talking about. What's the difference between these bars right here and these bars over here? What's the difference? These bars over here, like that. What's going on here? How are they the same? Are they doing the same thing? Going the left versus the right? What's the difference here? These bars right here different than these bars under the arrow? They're going down, right? So this is there's subtle little things that are going on here that you need to be aware of. And you just sort of have to develop a little sort of trading spidey sense, right? You have to have a spidey trading sense. And what I mean by that is that the market's leaving all kinds of breadcrumb clues there for you to observe. And you can gloss over it, but you're going to wind up missing a lot of detail that you need to actually take these trades. Now, tell me here where the bars stop going down. Okay? This is a question. I'm going to ask a question. I'm going to do it like this. I'm going to do A, B, or C. A, bar A, right? Bar B is the middle one here. And bar C is here. Now I want everybody, I'm going to give you 5 seconds to type in an answer here, because you should know what you're looking at here, right? 5 seconds from when I put this C here. When does the bars stop going down? A, B, or C? 4 seconds. Cast your vote. It's an A, B, or C. I mean, there's no discussion about it. You don't have to type a paragraph in and analyzing all manner of things about a chart. It's either at A, boop, B, boop, C, boop. 3 seconds left. Which bar in this sequence of 3 bars stops, or the retracement stops going down? One second. Cast your vote. One second. Time's up. Now, this was not a trick question, but let me explain. I see a good, healthy mixture of B's and C's, which is good. Nobody put in an A. All right, so the answer there, the earlier question was the difference between the bars on the left and the right. Obviously, everybody can see that when you're in a thrusting move and a trend up, generally speaking, the bars will be, with the exception of some little pullback bars, in the thrust direction, bars will continue to close up. And then as the retracement begins to occur, they will begin to close down until an equilibrium is reached, in this case here, in this case here, in this case here, where the bars will consolidate or bounce. Here we have a doji candle that closed up just under the midband. In my opinion, the market stopped going down on B because it closed up. Now, a lot of you typed in C, and that's perfectly okay, but it was definitely not A. Now, as you're learning these mid-band trade entries, it's really important in the beginning as you learn them, and I get a lot of confusion feedback about this, and that's why I want to kind of put it all to bed, okay? Let me explain. And this, I know this is highly limiting your trade type entries, but there's a reason I'm doing this. You want the bars to sit right on the midband itself. Here's why. A lot of times you'll get collections, and I'll show you this, okay? We'll look at several cases where this happens. Technically speaking, a midband trade can occur anywhere in here. Just under what would be a minimum criteria, right? Right under it. And they'll dink around in here, and you get wicking around, and then one will bounce, and then boom, up it goes, right? Or they might go deeper. It might go way down into here somewhere. All right. Now, those two areas tend to confuse. You want to branch out from sitting on the mid-band trade entry, because what I'm telling you, just to be clear, and my suggestion to you, is this would be the first trade for you to learn and really master. This mid-band trade example right here is the living definition of a mid-band trade. And it's the simplest and clearest one that you can have. Here we have a sequence of bars that all close down. Just underneath the midband itself, you get a doji that reverses up. That's followed by another bar that closes up. And what you do is you engulf this. There's many ways to get in, okay? You can put a limit order here. If you want to manually do it, you just be filled on that bar right there, long, right? You can hit a market order as this is reversing, jump in, right? You can put a region box around it using Object Trader tool, long only enabled, closed on the filled long a market order and it closes this bar right here. By hook or by crook, all manner of ways to get in, you are long from here. And this is the simplest example of a mid-band trade entry. Now, if you can, take a mental snapshot of that, because where this becomes more complicated, and I'm going to show you instances of this, where the bars will sort of dink around here a little bit. Okay, it won't be this clean. There'll be all kinds of bars kind of closing up and down in here, and you're like, is it going to bounce? Is it not going to bounce? So the reason that we like the region box usage, and we'll get into this too, is that if you engulf this area correctly, okay, I'll just leave it like this, that if it dinks around in here and never takes off and you never get filled, in this case you did, but if there's other cases, and then it goes ahead and goes deeper and maybe reverses trend and tanks and falls out of the bottom of the thing, you never got stopped out. Let's move on. Is everybody clear about this? Because once you have this picture in your head, you're going to know whether you have a mid-band trade or not very quickly. So now we're going to do some exercises. I'm going to advance a chart, reconstructing real time, and we're going to do a simple yes or no on your ability now to spot mid-band trades. It's going to be yes or no questions. I'm going to flash them up and give you 5 seconds on the screen to say yes or no. Are you ready? Wait a minute, we got some questions coming in here. What does a naked bar mean? I don't know what that is, Mindy. Naked bar. You mean this doji down here? This is a doji is where you have an extended wick. Stand by. Sorry about that. My sincere apologies. I thought I had that turned off, but that was my wife. When your wife calls, you always pick up. Happy wife, happy life. Let's see here. When you get a cluster above on a long, and I get tricked in, and it goes up a little bit and gets me in, then takes me out at the bottom. Well, we're going to look at examples of that, Minnie, and I'll explain how to deal with that, okay? If you're looking for a long here, why need a box versus a line to get in? I just explained, Mahalo. Maybe you came in late. That's okay. There are many ways to enter a trade. A region box is preferred because once it's activated, Object Trader becomes an automated strategy. It'll put all your targets in, scalp targets, runner targets, initial stops will be placed, trail stops will be enabled. Once your box is in and enabled and you're filled, that's it. You're done. It takes care of everything from there. The difference here is that if you put market orders or limit orders and you get filled somewhere inside this box, that's okay. You're going to have to manually put your initial stops, right? Manually put your targets in here. Manually track and take your stops and move them up. You have to do all that manually. Now, if you like doing that, then by all means do it manually if that works for you and you're making money doing it. Just keep doing that, right? But if you can learn that OT tool, it's really good. Well, if you drew a region box here, Shibi, and you do not get, let's say hypothetically, you drew the box differently than I have shown here, and it was up, say, here, and engulfed this candle, so you never got a candle close above it, hypothetically, and you were enabled long only, so it never got filled, right? And then for some reason, the market just reverses and goes down. Since you did not enable short, there's no trade taken here, right? So the only active part of the region box is here to get in. If you drew it as I have shown, now with the extended top of the box, you wouldn't be filled to the close, to the market order to close that bar right there. You see that? Oh, we're paused. Darn it. Cursor moving now? I think I paused the screen. Yeah, so in a nutshell, what I'm saying is that if you never get filled out of here with a close outside the box to the upside with long only enabled, right? Oh, long only enabled, and the market rips down here, you're not filled short, and you can start looking for deep retracement entries. Everybody see that? That's what I drew here. Now, what Mindy's saying is that there are times where it chops around this mid-band, and that happens, okay? It chops around here. You get filled. Maybe you get filled on this bar or this bar. You don't quite get a scalp off at 6 or 8 ticks, okay? Maybe it just goes a bar, maybe a bar or two, and all of a sudden it just rips right against you like this. You've got to get, there's 2 ways to get out. What's the ways to get out? What's the fastest way to get out of a trade that flips and starts going against you? What's the fastest way to do it? Anybody? You get filled on a trade long. It's going up and dinking around a little bit. You're thinking, "Ooh, I'm thinking 100 ticks and make a lot of money on this thing. This is the best trade of the day." And all of a sudden, just whoops, some bottom falls out, and it just starts ripping away against you. What do you do? Do you start moving stops around and hope they get filled? Or is there something else you can do? Anybody? What do you do? Market immediately turns. Do you take your initial stops and drag them out of the way and hope that it bounces? That's called a hope trade. It really exists. Hit the market close button. Perfect. Get the heck out of there, Mike. Right, David, exit, close, 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 right click, close, close every flatten everything. Right? I'm telling you, that's one of the best things you can learn here, aside from proper trade entry, obviously, is that don't be afraid to take a quick loss. You can always look to get back in. It's when you let those losses turn into huge losers, now you dug a big hole and you got to try to get out of it. Right? Psychologically, that's a problem. Money-wise, that's a problem. You don't get away from doing that. If you're going to take a loss, bam, book it quick and look to get back in. All right. So I don't see any more questions. Let's continue on with our exercise. So in this case here, I'm going to continue with the Russell chart. And when you see what you think is a mid-band trade entry, you type in an L for long, or an M if you want for mid-band. Okay, we're going to do an exercise. We're going to do a couple of them together so you learn how to spot them yourself. Are you ready? All right, here we go. Now this would have been about 6:34 Pacific, so we're 4 minutes into the equity market open on the Russell, and there's 6:34. Remember, when you see a mid-band trade entry, let's do this. Let's just type in an M for mid-band. When you see a mid-band trade entry set up, you type in the letter M. Here we go. 6:35 Pacific. Blow the bars up super big so you can see them real good. Actually, yeah, 6:34, 6:35 is right here. 6:35 and change. 6:35 and 5 seconds. 6:35. Does everybody understand what we're doing here? Everybody following along? We're looking for mid-band trades on the Russell. 6:36 coming up here. 6:35 still. 6:35. $6:35, 15. All right, I'm going to stop right there. Okay, now just to double check to make sure that everybody is awake and paying attention, where are these bars sitting right here? Where are those bars sitting? What's that? We got a ton of people in here tonight. People still coming in. Welcome. If you just came in, we're about halfway, well, a little over halfway through. So here again, for you new guys, guys and gals coming in, this is recorded. Everybody gets a copy. And what we just did an exercise. We've been teaching detailed mid-band trade entries. We just finished covering this one on the Russell right here in great detail. ABC, bounce, long trade, perfect, textbook right here. Okay, we just did an exercise. And for those of you that are still new, I understand. It's okay. You know, Rome wasn't built in a day, right? You're not going to learn all of this in the next 5 minutes. So don't worry about it. It takes repetition to see these things. So it's perfectly okay. So can you see now that these bars, in fact, were sitting right on the midband? Yes? I think everybody would agree that these candles are sitting on the midband. So should every single person in here tonight typed in the letter M when these bars formed right here? Yes or no? Yes. Every single person here on this exercise participating in the webinar tonight, when that bar formed, you should have typed in the letter N, M, and when that bar formed, the letter M. Yes. And I see, I'm going to guess roughly, like all numbers, I'm guessing about half of you did. So that's okay. That's good. Now, let me speak to this issue of how you approach this trade, following through on this example from the left. Now, if you use the region toolbox, region box out of the object trader tool, the top of the box is fairly clearly defined right here. Can you see how the wicks and bodies of these candles form? And I'm going to want to get really super detailed about this so there's no question about what I'm talking about. Can you see as these bars come in and rest on the midband that there is a top of them that's very clean right here at 1170? This would represent the top of your box. The trend is up, so you enable long only. We talked about that, right? Now, did you ever get filled out of this box? Long. Yes or no? If you drew a region box using the object trader tool and enabled long only, were you ever filled outside of this box? Yes or no? No, it never filled. Now, some of you are asking the question, are there other ways to get in? Can I put market orders in? Can I put limit orders in? Yes, of course you can. There's all kinds of ways to get in. Now, I'm going to explain it this way to you. If you emulated a box and did not draw the box, but clearly saw the resistance line here, you could have put a limit order here that would never have been filled, just like the box, right? However, if you put a limit order in here, down here, or you took a market buy order at or around the midband to enter, you were filled long. In which case, the market pulled against you and you might have gotten stopped out. Down here. Can you see the advantage of taking either a box or limit order approach? Yeah, that's what I'm saying. If you had a limit buy here, you were filled. Everybody sees that. The bars hit it. You got filled long, right? You had a market order down here. You hit market long entry, whatever. And let's say hypothetically you got filled at, I don't know, let's say right here, 1112, 1113, something like that. You got all the way down to 0990. So if you had a 15 tick stop, it might have just missed you. If you had a 10 or 12 tick stop, this probably got you. Yeah, full stop out. So I personally use the object trader region boxes. I like them for the purposes you see right here. If you're in a hurry and you don't have time to draw a box, or you don't know how to use the tool, that's totally okay. You can still trade. You put your limit order just as I have shown here. But then you got to manually manage it, right? Okay, Mahalo is saying, if the first bar never touched the midband, is it still a midband trade? And would you miss the trade going up? So now we're getting into the specificity of the detail that we're talking about here. So let me be clear. When this bar comes into the band, this colored band just above the blue midband here, this area right here. Let me just draw a little sort of rectangle. This entire area is considered a midband trade. Bars located anywhere in this rectangle are considered a midband. Now, if you came in late, you might have missed what I said over here. What I said over here was, for the purposes of learning this new trade setup, you probably want to initially focus on bars that come and sit around on the midband itself. So this bar would qualify and that bar would qualify. That would be the living definition of a midband trade in the fact that they're sitting literally right on it. Okay? But that is the, and if I turn this alert on, they should flash. See them flashing? See the bars flashing as they come in there? They're flashing, telling you that, hey, hello, we're in an uptrend. Here you are at the midband trade. You would still, notwithstanding the fact that they're sitting right on this midband right here, the trade entry is still here. Now, if you say, I want to put a limit order, I want to put a market order, I want to get in here, I want to be more aggressive, I want to get filled here, I don't want to wait for a close up here, I want to save myself 4, 5, 6 ticks on my entry. Sometimes those aggressive entries work, and you catch the run. Could you put a box around here? Yes. Could you would wait normally for at least 1 or 2 bars to form here. Here in this case here we got 1, 2, well technically that one, 1, 2, 3, 4, 5, 6, 7 bars. All to form the box to get long here. And we said, you know, if you get filled and it immediately moves against you, don't let it come down here and nail your 12 tick stop. Hit that close button. Ken, and stopped out. Do you put in close +1, close plus touch +1? Yeah, Robert, just to keep something simple, there's so much functionality built into Object Trader. I think in the beginning to keep it as simple as possible, just close out, just use the box and don't touch anything else. And just leave it really simple. And the way that works is when it closes outside of it, it fires a market order, just like that. If you did get a bar there and you didn't, it would fire a market order right there. That's it. No touching, no bouncing, no touch +1, all sort of manipulation of trade entry. In the beginning, as you're just sort of learning how this all works, let's keep it extremely simple. So what we're suggesting is only taking midband trades. In the beginning, if you want to be really super simple, you wait for the bars to actually touch the midband itself. Then you enter, as I have shown, either with a box or a limit order, closing outside of that area. Well, Craig, in this case here, where you did not get filled, and this is what you call a deep retracement or probe. We used to call them deep probe, deep retracements, or phantoms. Gary calls them phantoms. You could close this box, decommission this box, if you will, and then go ahead and draw another box down here. Long only, filled on a market order long on the close of this bar right here. Now, technically speaking, this is a deep probe. It's a legitimate long trade, and it worked out really well. Was there another chance to get in if you missed this deep retracement and you weren't filled here? Was there another chance to get in, yes or no? This box never got filled. I'm going to take this away. That's a fake candle. That never happened. You didn't get the deep one. For some reason, you were petting your dog or whatever, and you just missed it. Is there another spot you could have gotten in? Just a yes or no, 5 seconds. 4 seconds. Why? And yes or no. Another spot to get in outside of this box and that one. 3 seconds. 2 seconds. Why? Yep. Nope. And 1 second. Time's up. Yes. The bars are even flashing. Yes. Excuse me. Do these bars right here meet the definition of a midband trade? Yes. If you missed all this bounce around and everything over here, could you put another box or put a limit order again right here? Yes. And you have been filled on that bar right there. I do feel better. Yeah, I feel better, Minnie. Yeah, I'm doing okay. Okay, gee, mini Christmas. I've got 2 minutes left. And I have to scoot. I have a commitment tonight. So let's do this. I didn't really cover the short side. So here's what I'm going to do. I'm going to do a part 2 to this next week on Thursday. Everybody will be invited. And I will cover in detail the short side mid-band entry. So we covered the short would be essentially the same, only in reverse. So, if this was what I'm saying is, if this was a downtrending market, right? So the bars, your thrust is, let's do a hypothetical here. Trend is the opposite direction. Just real quick, I'll explain this more in detail next Thursday. Okay, and the bars come up this way into the mid-band. So in a downtrend, these would be, you're stair-stepping down, the bars are red, closing down. In the retracement, they're going to be red or yellow, closing up. Here again, touching, closing on mid-band, and then rolling over, and then you get your short. So it's the opposite of the long, but I will get into much more detail next Thursday, and I'll call it Detailed Mid-Band Trade Part 2. Okay. Craig, you got it. James, everybody. Yeah, it's just a mirror image. Yeah. But in all fairness, I'll get some other instruments and we'll go through the short side of boxing just so it's clear for everybody, because these are very, very important trade type to learn. And as I suggested earlier, it probably should be the first one that you learn and try to master. And then you branch out from there to the minimum criteria and the deep retracements and all the rest of it. All right, I'm going to stop the recording. Thank you very